Foundations of demand keep growing, even as prices drift lower. Bitcoin on-chain activity is quietly building a case that this bull cycle may not be finished. Analyst TXMC, sharing research on the X platform, highlights a powerful trend. On-chain activity, measured as the sum of spending and holding across the Bitcoin lifecycle, continues to rise. Each coin transfer, each decision to hold or to spend, is captured in this activity indicator. When tokens move frequently between wallets, activity rises. When investors step back and hold for longer, activity slows, adjusted for when each token was first issued. In a classic bull market, rising prices and rising activity usually move together. Supply changes hands at higher and higher levels as new capital flows in. Traders chase momentum. Long-term holders take profits. Fresh buyers step in to absorb that supply. But this cycle looks different. Prices have been soft, yet the underlying on-chain activity keeps climbing. This suggests that spot demand for Bitcoin is stronger than the price chart alone implies. It signals that large entities, from funds to deep-pocketed traders, may be quietly repositioning. They are active, but their identities remain unknown on the public ledger. The activity indicator is not a simple trading signal. It behaves more like a long-term moving average of blockchain usage. By design, it lags price action. Sharp rallies or sudden drops can appear first on the chart and only later in this metric. That lag means investors should treat it as context, not as an instant buy or sell alert. Still, the current pattern is notable. When prices pull back, yet the long-term trend in activity remains upward, it often reflects ongoing structural demand. Instead of an overheated market about to roll over, this looks more like a maturing phase of the cycle. Spot buyers may be using the pullback to accumulate. Short-term traders may be shaken out, while patient capital continues to build positions. For investors, this shift from pure price focus to activity-based context can be valuable. It reminds us that every candle on the chart is backed by real decisions on-chain. If activity were collapsing alongside price, that would hint at fading interest. The opposite is happening here. Activity is climbing, while price consolidation hides that strength from a casual glance. None of this guarantees that the next move will be higher. Macro factors, regulation, and risk sentiment can still drive sharp swings in either direction. Yet the data shared by TXMC suggests that the foundation of this Bitcoin cycle remains intact. The market may be cooling at the surface while deeper currents continue to flow. If you follow Bitcoin, watch both price and activity. Together, they tell a fuller story about demand, conviction, and how close we might be to the later stages of this cycle. This has been BlockBrief. Stay informed, stay ahead, stay calm, stay sharp.